Okay, let's talk about market structure. Market structure is the foundation of any trading strategy, and it's absolutely crucial to be able to understand it and identify it as you approach each trading day. Okay, so market structure is what helps us identify if a market is trending or ranging, right? In this example and this example, we have trending markets. The market is clearly moving up, the market is clearly moving down. A ranging market is when we're just moving side to side like this, okay? I know most of you know these things, but we have to go over these basics. So the market structure helps us identify whether we should be buying or selling or maybe staying out of the market, okay? So for example, in a bullish market, we're looking for a series of consistent higher highs and higher lows forming a predictable structure. That's where the term market structure comes from, right? It's the pattern that we're finding on the price chart that'll dictate whether we should be buying or selling if the market is bullish or bearish. So in a bullish example, we have a high point, price pulls back and creates a low point. From that point on, price gains momentum, enough momentum to break this high and create a new higher high, right? From that point on, we pull back a little more. Price creates this solidified low, but it's higher than this low. It didn't surpass that low. So we now have a higher low, okay? From that point on, we gain more momentum, break this high, which creates a new higher high. So of course, the expectation with this bullish order flow is that price will continue to make higher lows, higher highs, higher lows, higher highs, etc., etc. And the same goes for a bearish market, of course, just the opposite. So in a bearish market, we're looking for a series of consistent lower highs and lower lows. So again, just to briefly go over this, we have a low point, price makes a minor pullback and creates a high point. From that point on, price gathers momentum, breaks to the downside, surpassing this low, which creates a new lower low. From that point on, we pull back a little more, but we don't surpass this high. So that creates a new lower high, right? From that point on, again, we break to the downside, breaking this low, creating a new lower low. So that's about it. It's a very simple concept, but being able to understand this as you open your price chart every day, it's going to really tell you where the market may be headed, and it's going to give you the idea if you should be buying or selling. So both of these examples represent bullish order flow and bearish order flow. Without these, we have no directional bias, okay? So that's why it's crucial to understand proper market structure. Now, the next point I want to go over is that if price trades below a higher low, that can represent market sentiment changing to bearish. And on the flip side, if price trades above a lower high, that can represent market sentiment changing to bullish. So let me show you what that means. Basically, we have the higher low here, we have a higher high here. So as I said before, we're expecting a new higher low, a new higher high, etc., etc. But if price gains enough downside bearish momentum to actually break that higher low, this one right here, okay, so if we break that low, then that's a change in market sentiment. And that's when we can start looking at this example here and start anticipating short positions, right? Selling pressure in the market. And vice versa, of course, if we are in the bearish example here, like if it's a very bearish market, we're expecting price to create a new lower low, new lower highs, new lower lows, etc., etc. So if price gains enough upside momentum to break the lower high, then we would be changing our bearish sentiment to bullish, and we'd probably be looking for long positions, right? We'd be looking for this order flow instead. So that's the foundation. That's really as simple as it gets. It's just basic market structure. And now that we have a firm understanding of that, I'd like to go over breaks of structure and minor breaks of structure. These 2 points are very important in proportion to my actual trading strategy. So it's really important to go over that. So let's begin. Let me just rein this back a little bit, kind of to where it was before. Okay, so basically, let's look at the bullish example first. Whenever price makes a higher high, that is classified as a break of structure, okay? So I'm just gonna add this in real quick. I have a bunch of templates saved. I classify a break of structure as BOS, just to abbreviate it. So that's a break of structure, right? Because we had a high point and we broke that structure. That high was the structure and we have now surpassed it, we broke it. So whenever you see one of my charts, and I'll show you some examples shortly, you'll see this a lot because this is actually the first step to finding my entry. And of course, we're gonna go over that in later videos as well, but this is the absolute foundation to the strategy. So whenever market structure breaks, we label it as a BOS, a break of structure. So we have a break of structure there. We have another break of structure here. And on the bearish side, of course, it's the same thing, just the opposite. So as soon as price breaks this low, right there, we can classify that as a break of structure. Let's just flip it to the downside just so we're consistent. And again, same thing happens down here. That lower low was broken by a new, to create a new lower low. So that's another break of structure, right? And of course, in the example I had shown before, if price gains enough momentum to trade higher, then we would have a break of structure on this side, right? Because price would have broken that lower high to create a new high. So this would also be labeled a break of structure. Same concept, doesn't matter where the market moves, you just have to label break of structure because that's what helps you identify if you should be buying or selling. If we're seeing consistent breaks of structure to the upside, then we should only be looking for buy trades, right? Long positions. Of course, when you get more technical with it, you get a little more experienced and advanced, you can actually capitalize on the up move as well as the small down moves, right? As long as you know where price is headed to, you can capitalize on each one of these moves, but that's obviously more advanced. For the time being, we're just gonna focus on staying with the trend. So as soon as we're seeing breaks of structure to the upside, we're looking for long positions. As soon as we're seeing breaks of structure to the downside, we're looking for short positions. And as soon as that bias changes, we're looking for the opposite, of course. Let me go ahead and delete these. Okay, so the next thing I want to go over is minor breaks of structure, because I'm sure if you've looked at a price chart before and you're looking at these diagrams, you're thinking to yourself, well, these are perfect examples. The market never actually looks like that. And you're absolutely correct. So let me show you an example of what price usually looks like on a real-time chart, which of course we're going to go over more examples of the real-time chart shortly. But for now, let's draw a little diagram here. So this is what price usually looks like in a bullish market, for example. We have a high point, we have a low created, and then we usually have things like this. Right? So what that is a bunch of little substructures in the overall structure, okay? So overall, this is a high point. This is our low. This is our new higher high, and this would be our new lower low, okay? Those are the major structural points here. Those are the swing points, as some refer to them. And everything in between is substructure. So within that substructure, we can drop down to a lower time frame. For example, right now I'm on the 1 hour time frame. If we saw this on the 1 hour time frame, then perhaps we could drop down to the 15-minute or the 5-minute time frame to see things zoomed in a little bit more. And you'd see that substructure as basically its own mini trend. And so on the higher time frame chart, I would be labeling this as a break of structure, of course, just like we went over in the previous example. Okay, that would be a clear break of structure because price surpassed the high point and created a new swing high, right? A higher high. But within that, I like to classify these little things as minor break of structure. So just lowercase m, capital BOS, just to classify it as a minor break of structure. So we have one there, and we have one here as well. It's a very simple concept, but this simple concept is what allows us to get those really tight lower time frame entries, and it's really helpful for intraday scalping, especially because you can catch the move really, really early on, basically. So instead of waiting for the actual structural high to break, you can identify these little minor breaks of structure, and that'll give you the bullish sentiment early on before it actually happens. So it is a bit more of an advanced technique. It takes some practice to identify these minor breaks of structure and actually be able to trade them. But in this video, we're just going over the basic concept of it, okay? So we're not going to get too in depth on how to trade them exactly. That's going to be for the next few videos. But the point of this is to just go over the foundation of things so that you're not confused when you're looking at the price chart, okay? So we have major breaks of structure and minor breaks of structure. Both are absolutely crucial to understand in order to efficiently trade this strategy. All right, so now that we've gone over the basics of things, I'd like to actually dive into the real charts and look at the candlestick formations and the market structure within that. And that'll give you some good real life examples of how to utilize this knowledge. So let's go ahead and do that. All right, so we're on a real price chart now. This is Euro USD, my personal favorite pair, and we're on the 1 hour time frame currently. So I'm gonna give you a second to identify whether price is trending upwards or downwards. Are we in a bullish market or a bearish market? If you answered bullish, of course, that answer would be correct because we have a succession of higher highs and higher lows, and price is moving upward pretty consistently, right? But it wasn't always like that. So I'd like to go over step by step, walk through the market so we can identify the real turning points in the market and why we could stop looking for sells and begin looking for buys. Okay, so let's start to the left here. Price is consolidating quite a bit, but we do have a low point here and then a high point here, okay? Price gains quite a bit of momentum and surpasses this low. So right off the bat, we have to identify that as a break of structure. Tons of momentum within this move. These full body candles show that there's plenty of volume coming into the market and that sellers are taking complete control over buyers. So we have a bearish break of structure to the downside. And at that point, we create another low. We create a higher low. We create a lower low. And this point here, we create a higher high. Now, this is an important thing I'd like to go over quickly because I don't consider these wicks as an actual break of structure, okay? When I see a break of structure, I'm looking for this full body, high momentum candle surpassing that structure point because that is a clear break of structure in my mind. What the wicks mean is that at one point buyers were in control, but then they failed and sellers took control, so the market kept pushing to the downside. So although these are highs and lows within the market because it shows where price has been, I don't actually classify it as a break of structure. So if I saw this happening in real time, I would not just switch my bearish sentiment to bullish and start looking for long positions. I would wait for some full body candlesticks to close above that structure because that would show me that the real sentiment is changing. So although these are structural points within the market, it doesn't let me change my bias just yet, and I'm not going to be looking for long positions in this scenario. It would still be a bearish market in my mind. So this can be classified as a weak low. It's a very weak low because price barely broke through it. It is technically a break of structure. A bit of the candle body broke through it, but again, I'd be looking for more confirmation than that. So I'd actually highlight this as my new low. Technically, this would be a new high, but the point is we do break through very impulsively to the downside. And this is exactly what I was talking about. We have that full body candle momentum just pushing through that structure. So in this case, we're still looking for selling positions. just going to delete these circles as I go just to keep the charts clean, because all I want you to focus on is the actual break of structures. So from that point on, after that momentum kind of fizzles out, we create a new low point, and then we create a lower high. And from that point on, we start to trade lower and lower and lower, but we never actually break this lower low. We never surpass that point. So you can see that momentum is kind of fizzling out a bit, right? These are relative equal lows. Price never breaks through that point. So that right there shows me that there's not enough selling pressure in the market to consistently create lower lows and lower highs. So that might be a turning point. However, we don't have confirmation just yet. Now, this is where the last lesson I was just talking about with breaks of structure and minor breaks of structure come into play, okay? Because we have this solidified low, a solidified higher low, and then we don't create a new low, but we do have a new slightly lower high, okay? So this would be our minor structure point, and this is our major structure point. So of course, for me to change my sentiment entirely from bearish to bullish, I would need to see a break of structure of this point here, which of course we do get around here, but we'll go over that in a minute. So this is our minor structure. And we can see clearly that that minor structure was broken very impulsively. So this doesn't mean you get all excited and start entering long positions right away. This is simply signifying that there's a change of character within the market. This minor break of structure is your first warning sign to stop looking for selling positions, okay? As soon as you see this, you can start being more vigilant and looking for the actual swing point to be broken. So that's our minor break of structure. And then as price continues, we can see that we very clearly break this structure. Price actually struggled there a little bit, building up some more orders, and then volume pushed through into the market and impulsively broke that structure. So this is a very clear break of structure. Because like I said, this is the actual major swing points, right? Let me just highlight them again, just so we're very clear. These are the major swing points. So we never broke this low, and then we started to create a minor high, an actual high, like we broke the minor structure, we had a real break of structure. So now our sentiment can begin to change. So let's keep moving forward with this. We have that break of structure. Now, of course, what's our next swing point? Right here. So we're looking for that structure to break as well. And of course, that structure is broken right around here, right? So we're still looking for buys in this market. It's very strong bullish momentum. And of course, within this bullish leg here, we have other breaks of structure, right? If we weren't looking at anything to the left here, and we were just focusing on this bullish momentum, perhaps if we drop to a lower time frame like the 15-minute, and we were just focusing on this upward trend momentum, we have multiple breaks of structure within here. So this is a high point, this is a low point, this is another high point, another low point, another high. You see how it goes, right? This is our next low, this is our next high. So within all of these minor structural points, we have these breaks that can signify we should still be looking for buys. This is bullish order flow. And we should not be selling in this market unless we're very experienced, right? Another break of structure here. Another break of structure here. So you can kind of get the idea, right? Every time we create a solidified high, we're looking for a minor pullback, and then we're looking for price to break that high. Now, if we started trading to the downside and we broke this low point, then our sentiment would change and we'd be looking for selling positions. And that, as you can see, that didn't happen. Just like down here, we have relative equal lows, right? Price never actually broke through. Technically, if you kept this perfectly horizontal, you could say that price did break through a little bit with that wick. But like I said before, I don't count wicks as a break of structure. okay? It is a swing point in the market because that is where price has been at some point, but I don't classify it as a break of structure that actually changes my sentiment from bullish to bearish, or vice versa from bearish to bullish. So in this scenario, as soon as this happened, I'd look at it and be like, okay, well, it didn't actually break structure, so the long bias is still valid. And of course, what happens next is momentum comes into the market and breaks the most recent high to create a new high, right? And then we start consolidating, corrective price action, and we create a new low. It's a higher low because it did not trade below these two, right? It did not clear that level. So this is classed as a higher low. And these are our highs right here. And in most recent price action, we broke that again as well. So currently the market's closed. I'm recording this on a weekend. Now come Sunday and Monday, I'm still going to be looking for buys in this market on Euro USD because we have a very recent impulsive break of structure and we haven't even had the pullback yet. So basically what I'm looking for is price to make another corrective move, create a new lower high, right? I don't want it to surpass this one. I don't want it to surpass this low because then my sentiment might change from bullish to bearish. So I'm looking for price to make a corrective leg and then continue higher once more, breaking this structure here, okay? So that's as simple as it is. We look for minor breaks of structure to give us basically a warning that sentiment might be changing. And then as a trend is continuing, we're looking for consistent order flow, whether it's bullish or bearish, it depends on the market you're looking at. In this scenario, we're clearly bullish. So along this whole ride here, I'm only looking for buying positions, okay? Only looking for buying positions. Of course, like I said before, if you're on a very low time frame, like the 1 minute, 5 minute, maybe even 15 minute, you can actually capitalize on these corrective moves as well. Like you can be selling in the overall bullish market, right? All these little moves. There's money to be made. They're not high probability moves, but if your skills are advanced enough, you can scalp on the lower time frames. And of course, we'll go over that in later videos. So I hope this cleared things up for you guys about market structure. Even if you're experienced traders, I hope maybe we went over something that kind of opened your eyes a little bit to something you may have been missing. Who knows? I hope it was helpful. And stay tuned for the next video where we're going to dive into something even more juicy. It's going to get good. It's going to be a lot of fun. And yeah, I hope you guys enjoyed this. I'll catch you in the next one.